Hello and welcome to this session brought to you by the Academy of Practical Accounts in conjunction with your institution. In this session, we'll look at all expenses. The objective is to identify briefly the different classifications of expenses. Please note that the new regulations of HMRC in the UK accept that expenses are lumped up together as a single figure on the tax return, and therefore we're going to use a single form to record all expenses. However, let's have a quick look at the different classifications. Number one is for cost of sales. Then we have construction industry. Cost of sales are those expenses, the cost of what was sold. Cost of what was sold. Number two is construction industry in cases of subcontracting, then wages and salaries, motor travel, premises costs. This is rent, electricity, gas costs, all those security, those are premises costs. Then maintenance costs for premises and fixed assets. Administrative or office expenses. Postage is a good example. Then we have promotion and entertainment to do with advertisement, interest charges by bank and institutions we have borrowed money from. There's a small differentiation between interest and finance charges. Now, interest is on borrowed money, and then finance charges is like bank charges, fees charged by the bank for maintaining the bank account. Bad debts is money not recovered by the business when it sells on credit. And then professional costs, we're looking at accountants, lawyers, architects. Now, depreciation is the loss in the value of a fixed asset over the passage of time and use. Now, this one is not an allowed expenses for tax purposes, and we prefer to use tax allowances or capital allowances. It's more efficient to do it that way, because when this one is used, we have to add it back and then deduct the other one, which is cumbersome. And then, of course, any expense that doesn't fall in the above categories will go to other expenses. Now, these are the broad classifications that we normally find on the profit and loss account. However, because of the new acceptance, we're able to record all of them under one expense account, which is account number 25, as we're going to see on this chart of accounts. Briefly, chart of accounts, we said, is the layout of accounts in the general ledger in the software. Now, accounts 1 up to 20 is for incomes, and then 21 up to 44 is for cost of sales, as you can see. Then 45 to 49 is for the construction industry or subcontractors. Account 50 to 62 is for wages, salaries, and staff costs. Account 63 to 79 is for car, van, and travel expenses. Accounts 80 up to 95 is for rent, rates, power, and insurance. Accounts 96 to 105 is for maintenance of business premises and equipment and fixed assets. Accounts 106 to 120 is for administrative expenses. We've got telephone, postage, courier, stationery, subscriptions, refreshments, meals at work, business insurance, and others. Remember, most of these classifications have got what we call an account for disallowed expenses in that category. However, for the small businesses not registered for VAT whose turnover is less than 82,000, there is no provision for recording a disallowed expense. That one can be done in the bigger sole trader business, but not the small one. And then accounts 121 to 129 is for promotion expenses, advertising, sales promotion, entertainment, etc. Then 130 to 139 is interest charges accounts, overdraft interest, hire purchase interest, other interest. Then 140 to 151, we look at bank charges, loan fees, overdraft fees. Those are finance charges. Now 152 to 155, those are bad debt accounts. 156 to 164, professional expense accounts, legal fees, accountancy, other professionals. 165 to 174, that is depreciation and disposal accounts. 175 to 180, those are other expense accounts. And this is the end of expense accounts. But then remember, we now have provision to record all expenses onto one expense account, and that is account number 25. All expenses can go there. So in the next recording sessions, we're going to lump everything onto account 25. And the difference you can make probably is to modify the narration when recording. Well, that brings us to the end of this session where we looked at the different expenses and their classifications. Any questions, please, by email and Skype. Thank you.